Take us through what one of those finished, beautiful 3 bedroom, 2 bathroom houses you guys have might sell for. Hello, hello, hello. Welcome to the Rich Dad Radio Show. The good news and bad news about money. Part of the bad news, I'm not Robert Kiyosaki. He is traveling this summer, and I'm thrilled to be co-hosting today. My name's Robert Helms, normally host of the Real Estate Guys radio program. And we got listeners all over the world at Rich Dad Radio. We sure appreciate that. Just a few days back, beginning of the month, I spent a big chunk of time with Mr. Kiyosaki, and we talked about all kinds of things. One of the things near and dear to his heart, of course, financial education. And I told him a story I want to tell you. If you've read Rich Dad, Poor Dad, then you know the story. Robert and his best friend Mike discovering that they could melt down old toothpaste tubes to create quarters and therefore make money. Well, when my son was 11 years old, we're driving to Scouts and he says, Dad, you've got that printer that prints those beautiful color sheets. Could we take some $100 bills and make copies of them on the copy machine? And I thought, oh my gosh, this is my rich dad moment. I said, I love the way you think, but that's not how we make money. As you know, from reading Rich Dad, Poor Dad, chapter 1 is the rich don't work for money. They have money work for them. To transition to that, I was telling Robert the story of my son, now 18 years old. Well, he's 19 today, but before he left the age of 18, he bought his very first rental property, which is an outstanding feat. And it's not just because his dad's a real estate guy. It's because he's gotten the message. He's grown up at least a couple of times a year, seeing Robert, spending time with Ken McElroy and Blair Singer and all the folks. But even more so, he's figured out that a paycheck is not the answer, but cash flow is. And so when you're a young man and you're trying to figure out where to buy a house, you want it to be a place that's affordable, but you also want it to be a place that you don't have to worry about it. And you put those together, and there was only one choice for me. So how did he buy the house? Well, let me introduce you to the people he bought the house from, and we're going to learn a ton. These are my good friends, Terry and Liz from Memphis, Tennessee. Terry, Kerr, Liz, Brody, welcome to the Rich Dad Radio Show.
Thanks so much, Robert. Great. Glad to be here.
So awesome to be here, Robert.
Well, you guys have been part of our world for a long, long time, and folks are listening from all over. Some already have real estate portfolios, some have businesses, but some are just getting started. And Terry, I'd love if you would take us back to, over 2 decades ago when you started thinking about real estate and flipping houses. It was a different world back then. How did you get started in real estate investing?
Sure. My wife and I were renting a house. Our daughter had just been born. We wanted to keep personal overhead low, and wanted to have a nice house to live in, but really couldn't afford it. And so found a house that had been vacant for 13 years, and spent 7 months working nights and weekends to fix it up. And a couple of months in, I just discovered that I absolutely loved making ugly things pretty. I had no real estate experience. I had no construction experience, but fell in love with it, and had some sweat equity in the property when we were done, and went for it. And fortunately, it worked out.
I remember the first time we met, you told the story of, trying to figure all that stuff out and what had to be fixed and turning these old houses into beautiful houses. And today, if we were to go to Memphis in the neighborhood you guys are in, there's usually a bunch of nice houses and one absolutely ugly duckling. And that's the house that you pick out and turn it into beautiful. Liz, why don't you describe what that looks like? Because a lot of these houses, like the one Terry and his wife first saw, don't look very attractive, but like magic, you turn them into beautiful homes.
Absolutely. The transformation is one of the funnest parts of it. If folks ever are able to come out and visit us, my favorite thing is to show people the before, the during, and the after. And it's almost an unbelievable transformation. Maintenance and vacancy are the biggest killers of return, as experienced real estate investors know. And there's just something special about getting started with a new roof, a new furnace, new water heater, and all new kitchens, all new bathrooms, stuff that attracts more in rent. Really, every dollar we spend is either to attract another dollar in rent or to defer maintenance for our investors. And as an investor myself with the company, for me, when I finance a rental property, that's my chance to only put down 20% on a new roof or a new water heater. If you fix that as you go, you're completely out of pocket, and that's going to change the ROI. So it's a pretty neat setup. And the fact that we get to kind of fight blight, add affordable rental properties to the market here in Memphis and Little Rock is a really nice added touch. One of my favorite things is I've had little old ladies shoot out of neighboring houses to hug us because we took the one eyesore next to their house. We made it the prettiest house on the block. We put a renter with a good job and a clean criminal background history in that home that was falling down a couple months before. And it's a pretty special thing to get to do.
Yeah, it really is magic. And when you're thinking about investing in real estate, there's lots of things to consider. What we're talking about now is the type of property you buy. You might want to buy the skinny cow. You buy an ugly duckling and then you figure out how to get the work done and make it prettier and put a tenant in it. Or some of you are just too busy for that. You'd rather end up with the fat cow, if you will, the property that's been completely renovated, already has a tenant in it. For my son, that was his choice, right? By the time he closed on the property, you guys had already put a tenant in it. It was already cash flowing, a lot of less headache. But the other thing you need to think about is not just the type of house you're going to get, but certainly the market. Now, for Ethan, my son, a reality was he was young in his career. He was making decent money, but not great money, putting away every dime he could to buy a house. But price points are important. And we've got folks listening from, all over the world. Take us through what one of those finished, beautiful 3-bedroom, 2-bathroom houses you guys have might sell for.
So our inventory is from about fully renovated, already occupied. This is the end product is about 99,000 to 180,000 on the high end. One of the amazing things about Memphis and Little Rock is we're incredibly affordable. We're finding that people are moving here from higher cost of living areas as they want to become homeowners and start their family. And I think one of the coolest things about it, so we have investors in 17 different countries across the world and all 50 states. We're the oldest operating turnkey provider in the US. So that's given us some time for the word to get out a bit. And I buy my own properties directly from the company at full price. There's no employee discount for rental properties. And, if anybody could do it themselves, it would be me. I'm right here in town. And the cool thing about it to me is that it would genuinely cost me $130,000 to make a $120,000 Mid-South house. Our secret sauce is our ability to do a $55,000 renovation for 45,000 or so. And just because I would be paying one time for a new water heater and one time for a new roof, that alone would put me over. And so it's kind of a neat thing when the easier thing is the better value. That's pretty unusual in my opinion.
Yeah, I was going to ask you about the scale of this.
Sure, sure. Well, it's just a combination of saving money on labor, saving money on materials, and the speed with which we can complete the rehab.
Well, and it's not just that. When you show up at your office, you see your giant warehouse where you've got your own distribution hub there. You don't have to send someone out to the hardware store to buy a toilet or a water heater. You just have to load one up on the truck. So that's a kind of a unique selling proposition. Definitely a competitive advantage. Talk about that part, Terry.
Sure. So about 10 years ago, one of our managers went out of town, and I had to manage the technicians, and quickly saw that they were spending a lot of windshield time running around looking for materials. And they were either looking for materials on our dime and costing us money, or looking for materials for the owners of the property that we were managing to maybe say fix a water heater, let's just say. And so we decided to shift the gear and open up this warehouse. So all of the materials that go into one of our rehabs are out here in our warehouse. And so the 500 or so houses that we rehab per year, we're not having to go and purchase materials and spend drive time for our contractors, which again allows us to use our buying power to get the materials cheaper, and then also saves on labor from drive time.
It integrates really beautifully with the property management aspect of it as well. I joke that we have the same oil rubbed bronze toilet paper holder in all 4,700 properties we are managing, as well as the same water heater, the same thermostat, and that vertical integration helps with efficiency so much. Our average renter stays nearly 4 years. The average tenancy for us is 3 years and 8 months across the board. And, we ask every renter that comes to to us why they're leaving their current situation. And the answer is, my landlord won't fix anything, over and over and over again. And because of some of that vertical integration, Mrs. Smith can call in a repair before she goes to work in the morning and come home, and that hot water heater is going, and she can give her kids a bath. And it makes a difference in a lot of ways.
Well, and you mentioned the property management. So I know, Terry, when you started out, this is one of the difficult things is finding somebody competent to do two things. Number one, lease up the property, market it to prospective tenants, show the property, make sure they're a match, qualify the tenant. That's the first step. Once you do that and you have a tenant that's in, well, now the management begins, and things might go great. They might pick their rent on time every month, and then they don't, and you have to deal with all of that and collections and working through and so forth. Fast forward to looking for property managers to today. You guys manage more than 4,700 houses. That's a lot of houses to keep track of. But here's the distinction I love. For anybody listening, your property manager is the most important person in the entire thing. I mean, you got to have a great broker. You might even want to have an awesome lender. You want to have a good tax person. All of that matters. But with real estate, the property manager is where the rubber meets the road. That's the person that makes all that pro forma profit that you see on paper a reality. And you guys just have this dial. The first time I showed up in Memphis, I was blown away by just how friendly your staff is, how nice they were, even the people that do collections. It's like, wow, they're just so nice. And of course, now you've really taken that to the next level. You've got an even bigger facility, and you're managing houses both in Little Rock, Arkansas, and Memphis. What are some of the keys there, Terry, when it comes to making sure that the property managers do right by the tenant and by the owner?
It's availability and treating our residents with respect. Residents want curb appeal. They want speed. They want to be treated with respect like anyone. So the first thing is we answer the phone. Whether it's leasing, resident retention, whatever it is, we make sure to answer the phone, and we measure the phone calls. We record the phone calls. We have training calls. So we just never stop trying to sharpen the customer service axe on all sides of the business, but especially on the resident side, which is why, like Liz mentioned, we have about double the average length of resident stay, which is what makes the properties perform.
Well, as you mentioned this, but the two most expensive things in buy and hold real estate are vacancy, no one's living in your property, and turnover. Once someone leaves, you've got to do the work to make it ready. One of the distinctions to your homes, even though they're all beautiful and they don't look exactly the same from the outside. Once you get an eye for it, you can see kind of the 4 or 5 palettes that you guys have throughout the area. But if you have a tile issue, you've already got the tile in stock. If you need to have something painted, you know exactly what color the paint is. It's the same in all the houses. The kitchen cabinets, beautiful, brand new kitchen cabinets. They're the same in every house. So that brings in those efficiencies and economies of scale. And it's a small thing, but imagine you have a rental house and something breaks and you have to go find the replacement. Well, that's a hard thing to do. And you guys have that figured out. It not only shortens the time frame, but the expectation that the tenants have is met really easily.
Absolutely. It's not what you can do, it's how fast you can do it. And we pride ourselves on speed because speed equals quality of life for our residents and their families. And again, it all comes back to lease renewals. So, it's not any one thing, but that's a huge one.
Yeah, we're able to offer a lifetime occupancy guarantee that I think is really unique, unparalleled in the industry to my knowledge, that says that if your property were ever vacant for more than 90 days, we would start paying you the rent from that time. It's just there for comfort. Our longest vacancy is about 45, 65 days. It's something we work really hard on, but we're able to put our money where our mouth is on that.
We're talking today with Liz and Terry. They're from Mid-South Homebuyers in Memphis, Tennessee. This is the Rich Dad Radio Show. We have more. Stay tuned. I'm Robert Helms.
Have you heard about the expanding influence of BRICS, Brazil, Russia, India, China, and South Africa? and its potential to severely impact the US dollar by possibly creating a new world currency. Even JP Morgan said, and I'm paraphrasing, the impact of BRICS would most likely be felt here in the US, where moving away from the dollar would cause our financial assets like our IRAs and 401ks to lose value. We agree with JP Morgan and many others. Now's the time to position yourself for stability, security, and wealth protection. So take it from Robert and me, whether you're a seasoned investor or just starting, we believe that gold should be a part of everyone's portfolio. Seize the opportunity to ensure your financial future with gold and do it with one of the best in the industry, Allegiance Gold. Allegiance Gold has done things right from the beginning, having earned 5 stars with TrustLink and an A+ with the Better Business Bureau. Allegiance Gold can help protect your IRA or 401k with physical gold and silver, or you can have it delivered securely to your doorstep. Get up to $5,000 in free silver on a qualifying investment when you visit protectwithrobert.com today. Or you can call 844-3-ROBERT. That's 844-3-ROBERT. Robert sounded the alarm in 2023, and his warnings came true. Unfortunately for many, it was a year of lost wealth, but it was the complete opposite for the billionaire class. Now the wealthiest 10% of Americans own over 92% of all U.S. stocks. But here's the good news. You can invest just as these billionaires did. Robert has said, if you want to be rich, do what the rich do. So you can diversify across the asset classes with what are called low correlation alternative assets. For example, fine art as a tangible asset that rarely ever changes hands, the fine art market is more resistant to traditional volatility. So the fine art component of these billionaires' portfolios are at less risk. And now you can add the same blue chip art to your portfolio from the comfort of your own home. You don't have to be an art expert to do so. Masterworks, our longtime sponsor, has an art investing platform with over 880,000 people on board and nearly $1 billion in assets under management. From their successful art sales, they have consistently delivered a profit to their investors, and you can even go check their numbers. Our viewers can skip Masterworks' waitlist by using the link in the description below. Hi everyone, I'm Kim Kiyosaki. Thank you for being with us today. As CEO and co-founder of the Rich Dad Company, I can assure you, Robert and I are both dedicated to our Rich Dad mission to elevate the financial well-being of humanity. And you are the humanity. We truly want you to succeed. When you succeed, we all succeed, and our mission grows stronger. With that in mind, I'm excited to extend a personal invitation to you to elevate your financial well-being by attending our exclusive free online wealth building event hosted by Robert. You'll learn what to focus on first to start increasing your cash flow immediately. You can reserve your seat right now by going to richdadonline.com. Just go to richdadonline.com. The event is 100% free and will help you achieve your financial goals.
Welcome back to the Rich Dad Radio Show, the good news and the bad news about money. I'm Robert Helms, sitting in for Robert Kiyosaki this week. We're talking about real estate because that's kind of my thing. You know, Robert loves real estate, not because he likes to get intimately involved with the lives of his tenants or because he likes the smell of dirt. Robert likes real estate for 2 things, debt and taxes. Most people don't want to be in debt. They'd rather not be in debt. But debt allows us to leverage into property, and debt, check with your tax professional, tends to be deductible, the interest that we pay. And so the taxes and the debt allow us to create a scenario under which we have tenants who pay our mortgages. We're with Terry and Liz are from Memphis, Tennessee. A few months ago, Liz, you and I spent time together with my son and a couple of his young adult friends, and you toured us around and showed us Memphis. But one of the most impactful things you said to me had to do with kind of the life value of the property. When you buy a property, wherever it is in the world, and you have it performing, it's generally its worst performance is at the beginning. right? You get the property and you get the loan and you make the payment. You have all your costs and your property taxes and your insurance. And hopefully, if you do it right, more rent comes in than your expenses. That's harder to do today with interest rates the way they are. And we're going to talk about that before we're done. But the fact is that if you can handle the cash flow at the beginning, it gets better over time. Now, Liz, in addition to helping people buy houses, you own a bunch of houses. Take us through that for you, your first property that you bought all those years ago. Tell us what that looks like today, because I want to give folks a glimpse of not what their cash flow might be at the beginning, but ultimately what having this kind of property in your portfolio feels like.
Oh, wow. That's, I don't think I've ever shared this story before, but yeah, I guess I bought my first rental property from Mid-South Home Buyers in, I believe, 2010. I bought it for 85,000. The rent at the time, I believe, was around 800. And today, that property's, I would spitball about 160, being kind of conservative, frankly. And my rent is 1,200 at this point, also kind of under market to get that nice long tenant stay. And it was a really neat point for me, Robert. When I first started investing, I really just looked at cash flow. And I just thought that, $300 a month that I was making after everything, in my heart, that was like the only profit to the scenario. And I understood the other things, but it was really that moment when I saw how far my mortgage balance had come down. And I realized that when my rent is 950, I am getting 950. I pay a management company for my convenience and my quality of life. And I am letting them pay my mortgage down and pay my taxes and insurance for me. And it really changed my viewpoint from just the 300 at the initial part to, no, I'm making the whole 950, and I spend it for convenience over here. And I spend it on, this over here. And it's been a neat thing to connect to on the long term.
If you take a college course on real estate investing, they'll talk about internal rate of return. And that confuses folks. At the real estate guys, we call it total return. But what it means is that the return is from not just the cash flow, that's part of the return, but also the long-term appreciation. Okay, that's part of the return. You do have to sell or refinance to get to that, but it is equity on your balance sheet. And then you have the tax benefits, which are immense when it comes to real estate. And finally, the amortization, the slow pay down of the loan. Now, if you have that on the house you live in, that doesn't count because it's just coming from one pocket to the other. But when your tenant wakes up every day and goes to work for somebody else, not you, you don't have to manage them, you don't have to think about them, and they send the biggest chunk of their paycheck to you for the rent, that rent is what pays all the expenses and the pay down of the mortgage. So I know you have a lot of cases where folks come in and they buy a house using a loan, and then 15 or 30 or sometimes 12 years later, the house is paid off. And I'm not saying that a paid off house is the best way to leverage. Robert might say you'd want to think about that in terms of the debt structure. But I am saying that total return is not just cash flow. Now, we talked about the importance of markets. And Terry, you grew up in Memphis, and there's a lot of folks who come to Memphis, and there's a lot of folks who decide they want to relocate to Memphis because of the quality of life and the cost of living and all that. But you've been there since the beginning, if you will. Why is Memphis such a great market? There's one point that Forbes called it the best cash flow market in America. Give us the high notes on Memphis, Tennessee as a market.
Sure. The high notes are that 52% of the Memphis population rents. It's a rental town. And also in Memphis, folks can graduate from high school and go get a really good, solid blue collar job, working at FedEx, working on the river. We've got the largest cargo hub in the world right now with FedEx. We're on the Mississippi River. We're the distribution hub of the US. And so, since folks can get really good, solid blue collar jobs, they make excellent renters. And so, we're just very fortunate that Memphis is in the 98th percentile of cities with a rental population. So, just luck, but we'll take it.
The stars really align down to a lot of different boxes. We're a really landlord friendly state as well as Arkansas. That's always an important piece of the puzzle. And our construction style, our default construction style here in Memphis is a brick house built on a slab with a hip roof. I think it's the Goldilocks size for rental property. Our average property is about 1,200, 1,300 square feet. Is that not too big, not too small? It's not going to eat you up in paint between the turns. Yeah, it just a lot of different boxes got checked.
For sure.
Now, when we first met, of course, you were exclusively in Memphis, and rather than just add a market by throwing a dart on the map, you strategically picked Little Rock, Arkansas. Let's start first with why the attraction, but then I think the really cool part is how you were able to replicate your incredible system in a place that is a few hours away.
Sure. Well, we wanted something to be close enough to where we could put our eyes on it every single week. And so Little Rock also, the demographics of Little Rock, the construction style of Little Rock, it was just way mirrored Memphis. Then I also happen to have family there. And so our acquisitions manager is family. So that was awesome. And then we actually relocated about 20 Mid-South families to Little Rock and just jumped in with both feet. We covered living expenses for everyone for a year, and said, if you guys don't like it, you can come home. Nobody came home. They're killing it over there in Little Rock. So it really worked out. We love Little Rock, and we're doing new construction now in Little Rock, new construction now in Memphis, but we cut our teeth over in Little Rock. So it's really been great.
Now, most of the folks who have been familiar with you guys know that you find houses that are the junker houses and make them beautiful, and that creates great opportunity. You've also started some new construction, what we might consider build to rent. Can you speak to that?
Sure. We had quite a few investors asking us when we were going to start build to rent. Happy to say that we started about a year and a half ago, and we're now working on our third subdivision. They fly off the rental shelf. Renters love them, investors love them. You get all the perks of new construction, a 10-year transferable slab warranty, PEX plumbing that can freeze and you can hit it with a hammer. Just all the perks of brand new, if you will. Yeah, so we started that in Little Rock. We are now doing new construction direct to rental in Memphis, and it's just right now it's a relatively small percentage of what we're able to produce every year. But we're baby steps. We don't like to grow too fast. We want to make sure all our foundations are in place. But yeah, so I'd say probably about 20% of our production is now new construction direct to rental.
It's been such a neat addition as well because, as you know, Robert, we've had a wait list of having more investors than houses for years and years, really before the concept of turnkey, I think, was that well known. It was about 2011, I think, even though we've been doing hundreds of houses a year, and the new construction has just been excellent because it's shortened our wait times for our investors down to under 90 days. And so we've loved that.
Well, it's just one more choice, right? Investors love choice. And when you start out, you want to find a market that makes sense. And I think that transitions to the elephant in the room, right? You guys have been in business a long time, helping investors. You deal only with investors, not owner occupants. And interest rates are up a lot. And so, Liz, I know you're on the front lines of this, counseling investors about, wow, should I wait? Is this a good time? I will tell you that when you are in a market like Memphis, where the cash flows are super great, that definitely shoulders some of the pain. But how are you talking to folks today about the fact that interest rates are higher?
Well, what I'm finding a lot is that people are very conscious of how much inflation is bleeding their cash at a rate never before seen. If we were all seeing our bank accounts expressed as buying power, we'd be having collective panic attacks that we're not because it fools you and looks like it's going up when it's not. And, I buy one house a year from Mid South and we'll be doing this year as usual. And I can't wait to get my cash into the brick bank account that is a investment property and get inflation on my side. And I don't have the crystal ball. No one does. I think that rates may go down in a couple of years. I suspect personally that pricing may start to go up again when that happens. And so I'm actually happy to buy at the pricing that's held down by these interest rates when I can refinance pretty easily. So.
Well, that's a really good point. When you buy a 200 unit apartment complex like Kenny McElroy does, that's a harder thing to refinance. The loans are typically for a set term, and there's all kinds of issues around that. So not the same for single family homes, 1 to 4 unit houses. Generally, you can refinance. And I always look at it this way. If you buy now and rates go up, you're going to be glad you bought now. If you buy now and rates go down, well, you can refinance the house. And that's the last thing I want to talk about, because I know that the Rich Dad radio show is heard in a lot of places, not just the United States. You have buyers from 17 countries. You have a program specifically for folks that live outside of the US to be able to qualify for a loan. Can you speak to that?
Sure, absolutely. So, a lot of our buyers that are out of the country will pay cash. Some of them would prefer not to use all cash. So we have an in-house financing division where we're allowed, or we're not allowed, we're able to do non-recourse loans for folks all over the world.
Yeah, we originally developed it for our international investors, our Australian, Japanese, the list goes on. And then it's become a fantastic tool as well for US investors that are maxed out on our Fannie Freddies. That first house we were discussing, I used that financing. The bank would not lend to me to buy from my employer. And so, so I bought my first house that way. I refinanced out in a year. There's no early payoff penalties. So if anything new comes along. SDRA investors are loving it as a non-recourse loan. Those are very limited in availability, as well as international investors. There's no underwriting. And so younger folks as well that maybe might not qualify on their own, they're able to access it as well.
Absolutely. That's the exact loan that my 18-year-old son used, because at 18, you don't have 2 years of tax returns. You don't have your credit history. What do? Do you raise your hands up and say, well, I can't buy? No, you figure out a way, and you guys have helped that. We could go on and on, but time is short. Thanks, both of you guys. You're just such good folks and great friends. Terry and Liz, thanks for appearing today on the Rich Dad Radio Show.
Thank you, Robert. It's a
Thanks
pleasure.
so much, Robert. Good to see you.
There is no perfect real estate investment, but I'll tell you what, Memphis has a lot going for it, and I hope you gleaned some good ideas today. If you'd like to get even more of those, Terry and Liz have some pretty good resources available, and we'll tell you how you can get a couple of free reports they have, plus a real cool video walkthrough so you can see the warehouse we talked about, see some of the before and afters and so forth. All you have to do is send an email to midsouth@realestateguysradio.com. So just midsouth@realestateguysradio.com. You'll be able to watch that video, and you'll be able to get some of the details that Terry's put in to say some of his tips for turnkey rental housing, and a lot more great ideas, plus their contact information if you're interested. Real estate is arguably the single best investment there is, because it offers the tax benefits and the amortization and the leverage and the fact that somebody else lives in your house and pays down the mortgage. So hopefully you got some ideas today and expand your thinking. That's why you listen to the Rich Dad Radio Show, and we're glad you do. Until next time, I'm Robert Helms. We'll see you down the road. This is the Rich Dad Radio Show.
This podcast is a presentation of Rich Dad Media Network.